You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
It's MSE, and I'm your host, Bill Powers. Thanks for tuning in. And today I have a special treat for you. Returning guest. It's been 2 years, Tyron Breytenbach. Tyron, welcome back onto the show. You've been on the sell side of the business. You're a trained geologist. You're currently the CEO of a lithium exploreco in Africa. You're also a director of some junior mining companies. So you've been involved a lot in this sector. You're also an investor with your own money. So welcome back onto the show.
Thank you very much for having me, Bo. It's good to be back.
Yep, and I'm pleased to have you back. Let's jump right into it. Where are you seeing contrarian value in the junior mining sector right now?
Well, I think it's not tough to find contrarian value or to be a contrarian. I think if you label yourself a resource investor, you've already ticked one box. I'm really liking the lithium stocks these days. I'm liking Africa. I think while a lot of the investor community is running away from Africa, we're running towards it. My full-time day job is as CEO of something called Lithium Africa Resources. So I won't promote my own deal too much. But I think what's happened with lithium here is we had a lot of euphoria, 2019, 2020. As we were talking before the show, like when I joined Cormark in 2012, we did a little bit of lithium business. And I remember the lithium CEOs would get up on the podium and talk about lithium being used as ceramic. Like, I don't even know if they said EVs in their pitch. I think the very first Tesla supercar, right, was just starting to hit the media. So fast forward to today, we've created an entirely new market. And so it makes sense to have a bunch of euphoria, a machine gun approach where capital is being sprayed all over the sector, and that's now washed out, right? So the hot air has come out of the sector and the commodities matured. And in our deck, we actually have a slide where we show the performance of various commodities from 2014 to today. And lithium is schizophrenic, right? It's like the best or the worst. And so I think the market's maturing and the sector's figuring out what kind of projects are going to work. So if you have a high grade, low strip, low tech, low complexity, hard rock deposit, close to infrastructure, that's going to be there for 20 plus years, I think that is wildly valuable and exceedingly rare. And so when the space gets, devastated like it is now, that creates an opportunity for a stock picker because all the stocks are being treated the same. So you can go and find the diamonds in the rough. And what I've been picking away at personally, and this is not investment advice, is Patriot battery metals. Right, I've been thinking a lot about the uranium space, which I used to cover at Cormark, which nobody cared about in 2016. Like, you could not get anyone on the phone other than the same three guys who had owned these stocks for a decade. But NextGen and the Arrow deposit was one of these ore bodies that was going to survive in any cycle, and I love to invest that way. Right, when the sector gets washed out, you go and buy the best deposit in the space. And the other thing I liked about Patriot is I actually heard the CEO or one of the execs on a podcast, and he just was very reasonable, right? He wasn't throwing out big numbers and big timelines, and he understands that lithium is a chemical and you need to have partnerships downstream, and he had done it before. So, I see a lot of contrarian opportunity in the lithium space. Like, I think all of these charts are kind of making new lows. I saw one of the sell side shops today pointed out that Albemarle's had kind of a multi-year low. So I think that's an opportunity. And then going back to Africa, right? I mean, we are building at LAR a portfolio of what we think are really high quality hard rock deposits in Africa. Africa is like 2% of the lithium market today on the supply side. I think that's going to 20% one day. So we see huge opportunity there. But we are a private company. On the gold side, some of the things I think about is B2, paying a nice dividend, have kept their costs low, have managed the security risks. Africa's gone through this crazy transition, right? Especially the northwestern part of Africa, where the French influence is waning, the Russian influence is increasing. That generates a lot of headlines. I think the media gets these headlines like wrong most of the time. So if you've got contacts in the space, I think that's an interesting contrarian opportunity. And mines get built in Africa, right? Like, I think it was Endeavour 3 days ago that brought on Lafigué and gave a construction update on one of their assets. And it's like the fourth mine they've brought online, on time, and on budget. Like, that doesn't happen in North America very often. So those are I think two of the more glaring Contrarian opportunities that I'm excited about at the moment.
Tyron, on that note, when we talk about the future demand that's needed for these minerals to meet the society or climate goals, and we see that the supply is not there, is it that the Western society and governments need to become more like a lot of the governments in Africa, to where you can actually permit a mine within a reasonable time frame? Or is it the need for people to be educated, or the mining industry to get its act together so that it attracts more capital? Like, can you answer that question for me?
I mean, I don't know the answer to that question. I think governments could definitely help. I don't think government understands our business, right? They understand how difficult it is to get capital. And when you increase permitting timelines, when you tax our industry through the nose, you're just making it more and more difficult. When you weaponize critical elements as part of your policy, for political agendas, it just makes our business so tough. I live in a first world city here in Toronto, and I have a lot of friends outside the mining business, and they have no clue what it takes to make the knife and fork that they use at a restaurant. So it is very frustrating, and I'd say the average citizen doesn't understand the supply chain and how good our industry is, and how clean it is, and how careful we are, and how much we think about the economic benefit versus the environmental risk. Like, all these things are considered. So yeah, I do think there's a huge perception problem. It feels like the media only picks up the bad stories. I mean, I don't think the Globe and Mail's ever published on a mining success, right? Or the fact that Endeavour just brought this new mine online, on time, under budget, probably employing hundreds of people, has probably quadrupled the GDP of the local village. Like, you never see those stories, right? So we do have some black marks on our track record. So how do we fix that? I don't know. Like, I think we need better lobbying. We need some of our mining leaders to get the ear of the government and explain our industry. But it's such a polarized world. It's like tough to get the reality out there to the decision makers.
Would you invest in the United States or Canada in light of some of the government policies or lack of swift permitting, if permitting at all?
Absolutely. I mean, Canada's got a lot going for it. I think it's not the first place I go. Like, I'm a value guy. I've had my fair share of value traps, but I'll go for 20 grams in Africa any day of the week over half a gram in Canada. What the US and Canada does have is infrastructure, security of tenor. I think there's a lot of opportunity in northern Canada. You're seeing B2 put a lot of money into the Arctic. There's some really good grades there, and the infrastructure problems are solvable, quantifiable. So absolutely, I would. And as I just mentioned, I think other than my own stock, Lithium Africa, one of my larger investments is Patriot. I think it's a great place to be building or to be developing and exploring a huge multi-decade lithium resource.
What about Canada putting the nix on that Chinese investment in Solaris Resources? Like, if you're looking at a copper play in Canada, how do you go about that?
I don't want to express any political views, but I think it's tough to shut down external capital. And I think if you're going to do that, what would be really nice if they provided an alternative. I know in the US, you guys have the Inflation Reduction Act. That's absolutely helped, right? It's forced capital to be allocated in a certain way, but it's better than nothing, right? And so I think if you're going to shut a source of capital out of the country, then you should come up with alternatives. I think that's reasonable, right? Because at the end of the day, there are a lot of people just trying to move their project forward. But I also understand that these elements and metals are critical and sensitive, and and government should have policies and are understanding them. So I respect what Canada's doing. I think the big issue in Canada right now is like this capital gains tax, right? We don't really know how that's going to affect flow through. Okay, well, there are hundreds of companies who, depend on flow through to run their business, make a discovery, move their projects forward. So some clarity there would be helpful. So I think clarity and just understanding our business a bit better would be helpful.
Before you invest in a junior mining stock, besides studying the supply and demand fundamentals of the given commodity, what other macro data might you engage before you would invest?
That's a great question. I'm not a huge macro guy, right? So honestly, not much. Like I go straight to the project, the team, and the share structure. I mean, one of the first things
So you start bottom up, Tyron? That's where you start?
Yeah, pretty much. Like, I mean, there are some commodities that excite me a bit more than others right now. For example, lithium. So I will do bottom up, but I'll spend 70% of my time in lithium and a little bit less in say gold, for example.
Okay. What about shorting a junior mining stock? Ever done that?
I have done a relative short. I'm not a huge fan of shorting. I think you can get in a lot of trouble. When I've tried, I found you can't get a borrow, or the borrow is really expensive. I think it can be super lucrative and profitable. But I think that you need to ensure the company has a crux point, right? And so the best shorts I saw in my career were Allied Nevada. I remember meeting a super talented portfolio manager in London. And at the time we were marketing, Allied Nevada was Cormark's top pick, right? It was going to be this huge silver producer in the US. It was a market darling. Everyone had massive share price targets on it. And in the meeting, he's like, well,
with a key investor of AMC right now, right? If I'm putting it together, isn't it that same project?
Could be. Yeah. Well, so there was Highcroft and one other.
And then the movie theater bought a percentage of the company, that project right now.
Correct. So they, I think, have some newfangled recovery technology that they think is going to get the silver out. But like the street had missed this recovery issue, and the portfolio manager was like, it doesn't work. And he cited a section of the technical report where they had copied and pasted a paragraph out of the technical report, and none of the analysts had caught this. And they had a bunch of debt and they needed to refinance, and that was the pinch point. And the problem with the short is once you put the short on, it almost becomes like a war of information. So if the company's going to defend itself, a lot of people are going to own the stock, so they're going to hate you for putting on the short, and they're going to defend their position. And so it becomes like an information war. And I think it sucks up a lot of time. And so if you take a concentrated short position, it's going to consume your life for a couple of months. And there's only a few guys that do it super well. And they are like OCD, A-types are willing to like put their lives on pause and just do that for 3 or 4 years. But if a company didn't have a ton of debt and wasn't building or expanding, I think it'd be a very, very risky short, because you could drill one hole and blow up all the shorts. I like relative shorts, right? So if I invest in a gold company, I think the big producers are pretty sleepy, right? Like if you think of the mega billion-dollar producers, they're hoping to keep production flat. Like they're not growing. I mean, to me, that's not a very exciting proposition. And so I would rather get a guy growing from 200 to 400,000 ounces, well-financed, well-managed, good grade, and then I might short one of the sleepier seniors against that, or I might just short the GDX. So I would really use it as a hedge rather than an absolute short. But I know guys have done a lot better than me, but it takes focus, and they only come up once every couple of years.
So with the Save Canadian Mining movement, where they are calling out what they perceive to be naked shorters, do you think that's overblown? Because there's a lot of sophisticated investors that are hard on the CEOs and say, get your act together, stop whining publicly. But then the CEOs are like, don't let the naked shorts ruin my company, especially when I'm about to finance.
Well, I've really enjoyed watching it from the sidelines. And I think both have a bit of a point, right? I mean, the stocks I own and the companies I've worked for, like I'll give you an example. Ares moved from the TSX to the NYSE, and our spread closed immediately, right? And there were lots of weird trades to close our stock down, a couple of percent on like 100 shares. So weird stuff does happen on the TSX for sure. But the boogeyman of the naked short seller, I think, is way overblown, because most of the time you can't even get a borrow. And now I've listened to some of these guys go on about the specific mechanism of the trading platforms that's beyond my understanding, and they swear that it's happening. I'm not gonna disagree with them, but I think if that's your focus, that concerns me because I hate to refer to Warren Buffett, but like he said, in the short term it's a voting machine, in the long term it's a weighing machine. If you do something really good and have a good project and deliver, your stock will go up and you'll blow up the shorts, right? And sometimes having a lot of shorts could be awesome, right? Like I know when we're on the sell side, we would track it. And if there was a company we knew would beat on the quarter, but the shorts were building, and we had just been to site and we knew that the company was going to deliver, like these things can have meteoric rises. The other situation I think of a lot is Detour Gold, back when they were just bringing the mine on production.
And you were an employee back then too.
Yeah, well, I was employed in the early days, and then moved to the sell side. And everyone would ask me about the stock because I spent many years at the company and helped put the resource model together. So I knew the deposit really well, right? But they were just finishing off the build, and everyone was shorting the stock because they did have some debt. The gold price wasn't doing well. And then in 2016, we had these currency wars. Gold ripped. All of a sudden, Detour was printing money, right? Everyone was short. They thought a deal was coming. The company didn't put up a deal and just squeezed the shorts. I think the stock doubled in a very short period of time.
Did
right?
you and Joel do that on purpose? Was that intentional, the squeeze?
Oh yeah, no. The management team, when every investment bank in Canada is calling you every 5 seconds, offering you a no warrant bought deal, you've got some good cards. And so they were always going to do a deal, but they just waited, and they controlled the book, right? Like they made sure that no hedge fund got a full, and they gave it to guys who were long only. And then the hedge funds had to come in and buy the stock and juice it up even further, right? So that's why shorting is dangerous. Like I said, I think if you're going to short something, you watch your position like a hawk. You need to be fanatic. You can make a lot of money, but you need to really, like the guy who shorted Allied, I don't want to say his name, what he told me is he does 10 times as much research on a short bet as he does on a long bet. Because if it's a long bet, you can always just sell it and move on. But, when you're short, like...
Infinite losses.
And infinite losses. Yeah.
Okay, Tyron, this is a question I have for you. Being on the sell side in various roles, you talk to a lot of fund managers that raise money from other investors and say, I'm going to, multiply your money in the resource sector. If there's a high net worth person that has money, they don't want to devote their own time to researching, but they want to give it to somebody else to make money in this sector. What are the qualifications or the profile of a money manager that you would give your money to?
Yeah, that is a really good question, a fantastic question. And
how do you define success in a cyclical sector too? That's another question I have.
That's, again, a great question. So I'm stalling a bit here to try and think of a good answer. But the guy I would give my money to, it's really relationship driven. So I've spoken to the portfolio manager. I know how he thinks. I know how he manages money, and he's accepting of orders like mine, right? A lot of these pension funds, like they're mutual funds, and you can just go and buy it, and they're not very differentiated. So I think hedging is important. So I would want to give it to a guy who can hedge and go long and short. I'd want to know, does he have like a market neutral approach? Does he make full short bets? So I would want someone who uses hedging just to limit risk rather than go absolute short. I would want the portfolio manager to own a big chunk of his own fund. I do think the prior track record is important, right? And there are some funds in Canada that have like an amazing 10-year track record. Like it's unbelievable how consistent they are in the resource space. And it's because they can hedge, and it's because they can do any commodity, and understand the value of warrants and some of these derivatives. So I would start with a small long short fund with guys who talk to everyone and who have their own money in the fund. And I wouldn't go too big. So what I would see a lot on the sell side is, there'd be like a rock star fund manager who would take $50 million, turn that into 500, and then it get really difficult above 500, and they wouldn't take any more money. I can think of 3 or 4 funds that went through this cycle. So everyone's looking for the hot new fund manager that's going to turn 10 into 200, but above 500 becomes difficult. Like there's just not a lot of place to put the money, unless you go the private equity model. But typically the Canadian guys have been pretty good. Like a lot of the ones based in Toronto and Vancouver are really good at this.
All right, for a mine restart, I believe on our last show 2 years ago, you mentioned that you invested in Battle North, which was the rebranded Rubicon, which ended up the second time working out. The first time it was an abject failure. So what do you look for in a mine restart play? There's Westlake Gold, there's other mine restarts that are out there for investors right now.
Yeah, so I mean, I think you need to understand why did it fail the first time, okay? And they'll always say like, oh, they didn't have enough capital, the team sucked. But why did it really fail? You need to do a site tour without a doubt, I think, if it's a restart. And so if you know why it failed, then you need to fix what failed. And it's usually the resource. Like 9 times out of 10, the gold wasn't where you thought it would be, wasn't as high grade as you thought it would be, it wasn't as continuous. That's the number one reason.
So engineering, pretty much?
Worse, resource estimation. So engineers will take a resource model. The geologists will say, here's what the gold is, here's the grade, here's what it will dilute to, and then the miners will go and mine it. So it's usually the screw up usually happens in geology, right? Because engineering is an exact science. It costs X many units of fuel and manpower and equipment, whatever, to move rock and break rock, and the rock hardness can be tested, and geotech and all these things can be quantified. But the geology is a dark art, right? And there's a lot of human input, right? Like, how big is the block size? How am I going to cap the grade? How am I going to composite the sample? So that's usually where it falls apart. And so what I liked about Battle North is a couple of things. One, they took the grade down from I think the resource that failed was sort of a 12-gram deposit. By the time they were done with it, they had drilled it to Swiss cheese. They had capped every outlier. They had hard domain boundaries. They had like there were these 6 or 7 levers the geologists pulled to try and estimate what's in the ground. Because even a really well-drilled deposit is, the holes are 20 meters apart, right? So you have to make these inferences. But you can guide the algorithm, like how much of an inference are you going to give it? And you want to get close to nature. So you don't want to underestimating a deposit isn't a good outcome either, because that's how you kill a deposit and you can't get financing. And so they used really tight constraints. They drilled it like Swiss cheese, and then they went and did some test mining. Like they just went and mined it and processed it, and they mined it the way you would at commercial production. Often these bulk tests, what guys do is they go in with the teaspoon and they go right into the vein, and it takes them a month to mine one tiny little stope, and it's not really representative of mining. And so Battle North did all of this, and I think the grade came out at 5 grams, which is a lot lower than 12 grams. But because the capital was sunk, they had all these tax pools, it made money. And the great thing about Battle North is, they had a brand new mill, like a sparkling gold-plated mill. They had permitted tailings. They had a couple of $100 million worth of tax pools. So, there was like a negative enterprise value if you included those assets. So to me, that was a very unique situation. And then you layer on George Ogilvy, who has credibility. He takes you to site and talks about mining costs. Like, people believe every word he says. He's very good at what he does. And even that took like a really long time to get everyone back on board. Like there are certain assets when they burnt the space once or twice, like you do whatever you want. Like no one's ever coming back.
So the profile of the CEO for such a turnaround like that, it's got to be someone that understands the things technically, but also is a believable salesman. Can you talk about the profile of the lead exec in a situation like that?
Yeah, they almost need to undersell, right? They need to have a track record of doing what they say they're going to do, because, the first group failed, right? And most people in buying these stocks are not experts. We have to rely on management. And so all you have is a guy's word and reputation. I mean, the guy's been wrong before, like, why would you listen to him again? And so, and when I wouldn't want a salesman. Like, the thing about George Ogilvy was he was a miner, right? He had been underground. He'd broken a lot of rock. You'd go on a site tour and he'd tell you exactly how many tons were in each blast and what it would cost to move that rock. And so he helped instill a lot of confidence. So a lot of these broken stories, the first thing they could do is go and hire a really reputable manager, right? Because this guy is basically betting his reputation that he can fix it, and that'll bring investors. That's one of the few things that could turn one of these assets around. Is bringing a guy like that definitely helps with the momentum. And there is opportunity, right? Like, things do fail, and even if you're wrong about the resource, if your grade was too high, the thing was too big, if there's enough sunk capital, enough dead bodies behind you, so to speak, you can still make a lot of money, right? So I think you got to look at all of these things. But the details matter even more if it's failed once before.
If you're given a binary choice between buying stock in an unprofitable, poorly run open pit mine or one of these underground reimagined restarts, generally, what would you choose?
I mean,
because you've had experience with both. Detour was a huge open pit mine, right?
Yeah. Like I would go with the one that needs the less capital in the next 2 years, right? And so it's going to be case specific. I mean, open pit's always easier, more flexible, but if we know it's broken and it's high cost, then why bother, right? At some point, you gotta stop beating a dead horse.
Okay. Thoughts on the Anglo BP deal? What do you think about this proposed transaction?
Yeah, so I started my career with Anglo Gold, so I know the Anglo Empire.
You're from South Africa originally, for listeners too. Yeah,
correct, right? And South Africa only has a few mining companies, and they're centuries old, and they have a lot of history. And so, I didn't cover the big caps, so I'm not like an expert on BHP or Anglo. But what's standing out to me is in this market right now, all of these big diversified producers seem to be rejigging their commodity mix. So that Anglo deal was about copper, like they wanted the copper assets. And if you think about 20 years ago, iron ore, coal, nickel, that was a pretty good mix of commodities. The world looks very different today. Copper's become more important. I think the big producers need to decide, do they even want to be in the lithium business, right? Do they want to be in some of these agricultural commodities? So I think these deals are really about getting access to copper, getting the commodity mix right for this new world, this new energy transition. I don't think it was very good for the sector. One mega cap buying another mega cap for a small premium, right? Like I think what would have been more exciting is if BHP went and bought Filo, right? Or one of these exciting discoveries and just made a bigger bet, were more aggressive, said they're going to go and build it. I think that's going to happen at some point, right? Because one of the themes that I've noticed in the last 2 years, I can't find someone who doesn't like copper. Like that is a consensus. The world needs it's going higher. And it's less.
Why is it taking so long, Tyron? Because I've been hearing that for 7 years, just since I've been in these little stocks, and it hasn't fully taken off the way, because people told me 7 years ago, in 5 years, copper is going to be $9.
Well, we had COVID, which shut the world down for quite a while. We are starting to see the price move, right? So it's not happening. That's a question for someone smarter than me. I think we're starting to see the green shoots of it. We're definitely seeing like capital allocation switch that way. Like it seems like a lot of the big deals are about copper. I mean, Mark Bristow is talking about copper. He thinks that's the way for Barrick to grow. We've just seen this BHP deal. We've seen the market rally around Filo and their complex in South America, right? I think about something like Foran, right? Like they have Fairfax as an investor. I mean, those guys don't buy junior mining stocks, and so clearly they have a view on copper. So I think it's starting to happen. And there's not a lot of product either. And the thing about the copper space is, unlike the gold space, you can't really find a relevant low capex name. Like there's a few oxide projects, like I know, Meridian's kind of interesting. But to be relevant, you're talking billions and billions of capex. So like the way I'm playing the copper space is the explorers, right? So I missed Filo. Well, I owned it. I get $2, sold it at $4 based on Stefan at Cormark's recommendation. Thought I was a genius. I missed one of the all-time great moves of my career. And so I've played this Magotes, which is right next door. It starts trading today, actually. They did a special warrant deal. There's something called Copernico or Copernico.
They're a sponsor of the show. Yep, they're a sponsor of the show. Yep.
Okay, so I did not know that when I picked it. But I like these guys because they're exploring for world-class deposits that are relevant. I have made the mistake of investing in low capex copper projects that were sub-relevant. And I think in gold, you can go small and high grade, and small can be beautiful. I don't think you can do that in copper. I think the real one is chasing the big deposits.
If you own a copper developer, like a porphyry copper developer, from your vantage point, with all your experience, what's the ideal finance package that you would like to see to bring that into production from the investor standpoint?
So the precious metal streaming is a no-brainer. I mean, First Quantum, like 2014-ish, balance sheet problems, stock got smoked, and Franco gave them $1 billion or whatever the number was, right? And so if you're Franco trading at 25 times, no copper producer trades at 25 times cash flow. Take the royalty money, as long as it's not egregious. Don't give up, don't hedge too much. Don't give up too much of your offtake. If you can find real low-cost debt, get your debt to equity mix right, and get a strategic, right? So, I mean, we're talking about like good financing deals, and to me, there is no one financing deal. It's like the best CEOs look at every option. They don't throw anything out of the window, right? Like stream financing, offtake, debt, equity, and just get the lowest cost of capital that fits your project. And if you do a royalty or a stream or an offtake, do one where you can get a buyback, right? I just thought it was such a cool press release recently to see Lundin, buy out all of their gold offtake, buy out their stream. So when they were building this new high-grade mine in Ecuador, a tough country, or at least an unknown country at the time, they bet on themselves. They said, we're going to do the stream, but we're going to give ourselves a buyback. And if we execute and do what we think we're going to do, we'll just buy it back, which they did. So try and engineer as much future optionality into any of these structures as you can, I think is a good way to do it. And then finally, joint venture, right? Like if you're building a great big copper mine and you don't have deep pockets, why not split the asset? Right, so our model at Lithium Africa is we're embracing the joint venture, which I think is not used enough in mining. So we have geological expertise. We could do great deals in Africa. We're nimble, we're fast, but we don't have a giant bank balance. And so we've partnered with Ganfeng. They're our capital partner. They're our downstream partner. They're lithium experts. They're one of the best reputations in the business. And so we're happy to give them half the asset. And we're gonna both shareholders are gonna benefit from that.
How did you work through giving them part of the asset versus part of the company? Like as the lead exec, when you were negotiating, what was your thought process like?
Well, they're a lot more powerful than us, and so I think it's the only structure that they would have been interested in. I've seen them be a phenomenal partner. If you look at how they've treated Leo Lithium, I don't know if you follow that story, but it's a great big hard rock deposit in Africa. I think the best pegmatite, the best lithium deposit in Africa. There were some issues in Mali with the government, and their partner was an Australian listed company, and Ganfeng really stepped up, injected capital into the business, and it's just been such a good partner. So I've watched them behave as a wonderful partner. We split decision making, we split budgeting, and I want their input. So honestly, it wasn't much of a negotiation. We both wanted the same thing and had the same concept. They understand our value. We understand their value. And I'll give credit to my chairman as well, who led the negotiation because it was kind of before my time. But yeah, I think we were all on the same page on day one.
Do they have a right of first refusal on the other half of the project on anything going forward?
No. So we maintain full optionality on our 50%, which is very, very important. So our shareholders, if we find a great big lithium deposit one day and bring that into production, they will get full exposure, or we can go and find another partner. But we're able to keep that to ourselves.
My last question, Tyron, or likely my last question, on Twitter and other online platforms where people talk about junior mining stocks, what utility do you see for you personally there? And then what advice would you share with some of my retail listeners regarding how to use Twitter and online forums that talk about junior mining stocks?
I love Twitter. I think it's amazing. I think it's sometimes more valuable than sell-side equity research. So these days,
that's quite the statement coming from a guy who did it.
Well, I think many analysts would admit the same thing. It's not that analysts don't do good work, but it's like the compliance burden that you have to deal with now is insane. There's like 20 pages of disclaimers attached to the report. You can't be salacious. You can't have a strong opinion. The investment bank is going to slap your wrist because you're pissing off a potential client down the road. And so smart investors translate analyst reports, right? Like, you could say sell without saying sell. And I think analysts have great resources. They can go and see the company. They put in amazing work. And you should read reports because they're very deep and focused. But I think for like on-the-fly chatter, right? It happens so quickly. You have to be on Twitter. So you have to use both. Like once you've got an idea about a company and you want to do a deep dive, like go and use the research report. But like watching day-to-day trading, you better be on Twitter. You got to follow the right people. And so what I would do is I'll find a guy like you and just copy everyone you follow. So you got to follow the right people. It takes 6 months to find the right mix of people. And I
do you
find
follow the long and short side of the argument for the stocks you're in? Because that's something I do.
Absolutely. And a lot of short arguments I didn't even know existed. I've already found them on Twitter. But like I've had some real good ideas come out of Twitter, and a lot of my trade ideas are generated from Twitter. It also forces you to be thoughtful what you say, because if you put something up there, you've got hundreds of thousands of people like ripping you apart. So you got to have a thick skin, which I think I do. I don't really care. But it makes you question your thesis before you put it up there. So I think it's a wonderful tool, a wonderful forum.
Excellent. Well, Tyron, I really appreciated you coming on the show again. You don't do too many of these where you talk about your general thoughts. I wish you the best in your CEO role, and you also have some directorship roles I saw in some press releases too that you're engaged in, right?
Yeah, correct. So firstly, I want to say I really value your platform. I thought your Tommy piece was very good. It's there's so many of these things.
Less than 4,000 listens on YouTube. People don't like that content, even though it'll help them.
Check that one out. It's gold, and I think your stuff is differentiated. So I do a shout out for Rua Gold, which has been a pet project of mine for 4 years. The CEO left Aris, a very high-paying job, to go and take the role out. I'm putting my hand up as a nominee for Alaska Energy Metals. It reminds me of the nickel and P.Geo deposits in South Africa. But thanks for having me on, and I'll continue to watch the show.
All right, we'll stay in touch. Thank you, Tyron.
Thank you.